Welcome, ladies and gentlemen, to Stock Talk on June 20th. It's 5:33 p.m. Eastern Time. For those of you who joined my live stream today, I hope you enjoyed that one. We talked about general market movement as well as tickers that we did not get to in the videos prior to this one. So if you guys submitted a ticker in past videos and did not see it being talked about, you can refer to the recording of the live stream, which is on this YouTube channel. But let's get to it right away. The SPY or SPY on the 180-day chart, and we've said in past videos over and over again that the support is 274 to 275.50, 274.50 to 275.50, and that our entrance into the market has to be in this area, because we know that the probable reversal area has to be near the support. And in fact, today we had a massive confirmation that yesterday was the reversal day. So looking at this, we see that here's the 20 EMA line, right? The light blue line, and we see that the first 4-hour candle, we pulled over the body of the candle, stayed over the 20 EMA line, tested again, and of course the last 4-hour candle, we kind of came down back to the 20 EMA line, and we're stuck right at the 20 EMA. So what does that mean for the future days to come? There's two scenarios that I'm still waiting for it to play out. The first scenario is surely we can just kind of come down a little bit and then have a continuation move upwards. That's option number one. Option number two could be something like this. We were looking for a mini scare today. Did it happen? It really didn't. Looking at intraday SPY, what did I talk about in terms of a mini scare? Well, there was the potential for it to come back down to the support or the gray area and then bounce off. So what happened intraday? We did come down, barely touched the top of the support line, and then we bounced off. Surely that's perfectly fine with me, but that's why option number two is there for tomorrow. It could do something like this. Do a mini scare, come down here, and then reverse back up. The second option is just reversing back up, like that. So those two options are on the table, but what do both options signify? Both options signify that we're going back on an uptrend. So, in this case, hopefully you found a nice cushion or nice entry into the markets around this box area, which we've said many times before, especially if you watched my past videos. Looking at the 1-year chart, you guys can see what's been happening, right? We gapped up on the daily, and now we're back. You can see that we've hit this massive support line. We've retested on the 180-day, the 200-period moving average, and now it looks like, we're going on an uptrend once again. So let's take a look at TVIX or volatility. Here is volatility, TVIX, and today it dropped 4%, right? A little over 4%, and this is not anything unusual, since as markets do start pushing higher, we expect volatility to continue dropping. Certainly, volatility is not a play right now, given that we're on a steady decline. Okay, taking a look at commodities /CL, tracking crude oil futures. Crude oil has been pretty bullish, at least today. Okay, so today it's been pretty bullish, but one thing to keep in mind is we had crude oil inventory reports come out, and look at this massive fluctuation, right? It came out around 10:30, and here we are. We have some massive fluctuation, some indecisiveness, followed by a massive buying, and then a lot of selling, and then we just had fluctuations around the VWAPs, right? The top VWAP and the bottom VWAP. Regardless, crude oil on the 180-day chart, just being objective as possible in the big picture, it still looks like it's on the downtrend. Yes, look, this is a bear flag pattern, right? Bear flag, and now it's coming back up. The resistance is at where? 66.66, around that area, and we expect another down move to come unless a pattern breaks. And so far, the pattern has not broken for crude oil. Looking at SPSIOP, oh my goodness. A little too excited right there. SPSIOP tracking oil and gas exploration. You guys can see that this is a more promising pattern. We have a large spike followed by a very predictable horizontal pattern showing our good entries into GUSH or GUSH. The question is, are you going to get in GUSH right now? Well, the answer is I hope not, right? We're at the resistance, and if you really wanted to take a position, that position has to be drip, but just note that drip is on a descending trend on the 180-day chart, whereas GUSH is on an ascending trend. It's more likely to buy on the bottom for an ascending trend, which means the best time to buy, in my opinion, is if or when GUSH returns to $34 to $35. That is the time when we can get into a position. Now, here's something else I'm watching. Here's GUSH at the resistance, right? We can easily get rejected near the resistance, somewhere around $40. However, we can catch it at the 200 moving average. If we come down, note that we don't have to come down to $33 to $34. It can catch it at the 200 moving average, and what would happen? We would form this ascending triangle formulation, which would play most likely to the upside in that sense. So that's just a very theoretical scenario that I might be looking at in the future, but certainly this is not the entry point that we're looking at right now, and we'll reevaluate GUSH on a day-to-day basis, as we always do. Looking at /GC or gold futures, I hope this wasn't a surprise either, because a countless amount of times we've talked about gold and how the support is at 1268, and that yesterday we started closing around here, and we said what? Well, there's still some room for gold to fall. Well, where did we fall to? We fell straight to almost to the support. So we're not exactly there. We're almost there, so I can still see gold dipping down a little further before finding some sort of support around this area. Should this support not hold, we have to look at the 1-year chart, and the 1-year chart really says that around here in this area, but you can see that these support areas are not too strong at all. Perhaps this one's a little stronger, but this one's really not that strong, the one right here. So that's what I'm looking at for gold. So JNUG and JDST can't be, or JNUG can't not be a play right now. If you guys did go into JDST, I hope you guys were able to take advantage of the small percentage gain. It's still 2%. It's not too bad. Looking at /NG tracking natural gas futures. Natural gas futures, again, this one is something that we've talked about yesterday, right? What was the trading strategy for UGAZ, which follows natural gas? We said that we were at the support, right? And if you wanted to take the position, you could have at the support, because we had a failed breakout. It came down at the support. If you wanted to buy into natural gas, this is the time to buy in. And look, today we went up a couple of percentage points, I think a little over 1%. You can see that we've had a higher high plus a higher low, plus a consolidation pattern. This consolidation pattern, the longer it consolidates in this area, usually will play to the upside. So, of course, we don't want to guess where the breakout is. Look, if you guessed if this was the breakout, what happened? You actually ended up losing money since it came down. So the best time to buy would be at the support. The best time to sell, well, it's at the resistance, 2.989, 2.988, around that area. So again, UGAZ is the play that if you wanted to do the natural gas play, you can see that the support has been held very nicely at around $62.90, $63, and then you see the resistance being held very nicely around $68.13. So where's the best time to exit? You could have exited end of day today. That is certainly one option. Let's take a look at Tesla, of course. I think this is one that we always visit at the end of commodities. Looking at Tesla, show you guys the 3-year chart first. Just note that the weekly candle has not fully formed. And once again, this looks pretty bullish, right? So I talked about how I went into an entry position into Tesla yesterday or something like that, and this is just something to keep up. Like, even though it started dipping, look how we're kind of recovering now as the market started to recover. So in my opinion, Tesla still looks pretty bullish, and there's potential for higher prices to come. So this is one I am actively monitoring as well. Okay, let's get to your comments. Addy boy, hey, GUSH is forming a bull flag pennant almost there. Should we consider it a buy? So yeah, we talked about GUSH just now, right? So there's two viewpoints, right? One is the bull flag pattern that's been emerging, which I kind of agree with that. I'm leaning towards that a little more. The other one is the bear flag pattern. You can see that this is the bear flag pattern that will play out, but I'm favoring the bull flag pattern. So entry points, you know your entry points down here. Certainly not up here. Please do not guess where the breakout is, because more often than not, you will start losing more money than you gain. Tango, SBUX on the drop. Does this make it a buy? So SBUX, Starbucks, I believe, is earnings. Yeah. Oh, what? No earnings. Okay, so ironically, I guess there was no earnings. It was just a massive drop today. Ooh, that is not good. So certainly this is not a buy, right? Looking at the 3-year trend, this is a horizontal pattern. Ew, this one's difficult. Okay, so on the 3-year chart, it looks like we're at the support, right? But it's just given the magnitude of this decline. Look at this candle, right? This candle is bigger than this candle. Let's look at the 1-year chart really quick, right? Even when we started gapping down, what happened? We retested the 20 EMA, got rejected, kept going lower. Today, this candle has fully formed, and it looks like this. It broke below the support. Not very good. Not very good at all. This broke below the 1-year support, and I would certainly wait on this one. Do not get in. Even if it starts recovering back to the 20 EMA, it can still come down further. At the very least, wait for some triple bottom on this one. Look at this. 1, 2, triple bottom. Even 4 times bottom. Then you can get in at that point. You see an ascending pattern. Certainly right now. Ivan, hey Captain. Interesting. I like that. Okay, so hey Captain, what are your thoughts on Twitter and what happened with FDX or FedEx? I had a great earnings report, but epic fail. So I'll just do the well, you know what? I'll do the second one since you talked about epic fail. So here's FedEx. Oh, look at this box. You guys called this one out in the past, and I did this box for what reason? I told you guys because you guys wanted to buy right here, remember? And I said, look at the number of candles below where you wanted to buy versus the number of candles above where you wanted to buy. Is this a good time to buy? And the answer was obviously no, and I also gave the suggestion that, well, earnings are coming up. Certainly we don't want to keep stocks or ETFs on based off of earnings. So now it's falling. So why is it falling? Regardless of, it's the market perception of what the earnings are. It might be the guidance report. It might be some sort of fundamentals that we're not seeing. Or, it's what the market's reaction is. It's not necessarily what the numbers are. It doesn't have to be exactly what the numbers are. Sometimes people beat earnings and the stock goes down. This is just how the market works. So you can see that we were near the peak, and now earnings made it come down. So the question is, where can we enter? Well, you guys can see that the 150 moving average has been acting as a support. In this case, we can go down a little lower to 48.26, at which time I could look for an entry position. But for now, I like this dip. Now that our box is shrinking, right? Our box is more like this box. That's good. Let's let it go a little lower, especially based off of earnings, and then consolidate, get into FedEx. All right. Roland, sorry. Do you have natural gas? Yes, I have commodity analysis every day. So, Rizwan, Cat buy at, so we talked about Caterpillar in my, the stock talk or the live chat today. Analysis on triple Qs. I watch your videos daily, and it's awesome how my channel has grown. Yeah. So, with TQQQ, we know that this one has been incredibly bullish, and you guys can see that we made a 1-year high. Let's take a look at a 3-year high, right? This has been incredibly bullish, and it's been pulling higher and higher and higher. As a matter of fact, I entered into the triple Qs yesterday when the markets were recovering in the grade area, remember? I employ my own strategies, so I'm not just telling you guys just because it's fun. Anywho, triple Qs, where's a good entry point? So you guys can see that on the 1-year chart, we actually test the 20 EMA. Those are good entry points. Certainly, if you want to get in right now, I would correlate this with SPY. Once SPY starts dipping a little, certainly NASDAQ might have a chance to dip as well, and you might get in a little better price rather than the 3-year high price. So at the very least, I would wait maybe for another dip. If you want to enter, you can get your feet wet a little bit right now, but certainly not your entire portfolio into the triple Qs. USLV, we talked about that during the intraday analysis. Evan, EDC. Okay. So here is EDC on the 180-day chart. So without even kind of me telling you guys, what do you guys see, right? This is a descending pattern, lower highs plus lower lows. We don't want to guess where the support is. This right now is certainly not a support. If you're trying to play this descending pattern, you're thinking it might get back to the 20 EMA, but I want to, just question that call, because sometimes you can see that it's fell a lot, and then what happens? It bounces up and comes back down. So, this is just a descending pattern, and the risk is greater than the reward. And even if it starts going to the 20 EMA, I would not be sad. Oh, this is emerging markets. Oh, yeah, no. So I would not reconsider going into bull emerging markets, as emerging markets have been falling. You can see in the past few months. So I would go to the inverse of that if possible. Rizwan, LYB. All right, so I think that's all the tickers. I'll take a look at some of the other tickers. Okay, I'll do one more. IQ. Okay, so because you guys, a lot of you guys called out IQ, and Prashanth, I bought IQ today at $45, looking for a quick squeeze. What are your thoughts? And then Chris, have you exited IQ? So IQ, I actually went back in today. So IQ is one that I exited around $40 in the past, and I re-entered today when it was around $42.30. So the thing about this is this 180-day chart. I'm giving you guys this chart, right? What do you guys see? Zooming in, 20 EMA test, 20 EMA test, right? It's still on the uptrend given that we've bounced off the 20 EMA. So I took the position where? Well, when we were bouncing off the 20 EMA. That wasn't that a great time to take that position and put a stop loss in. So yeah, this is, I think, one that is actually really interesting since it climbed to 44.20, but we got to be very cautious tomorrow. We know that the resistance is around $45, right? We know that the resistance is around there, and it's really a way of how do we get over, and can we keep over $45 tomorrow, if and when we do that. So tomorrow will be a fascinating day for this one, in my opinion. This is something I will be monitoring since I'm in this position as well, because we're doing a couple of things. On the 180-day chart, we're actually kind of curving back in. We expect this horizontal pattern. So based off of this trend, tomorrow we expect another leg up, right? But if it starts going horizontal a little more, I might just exit if it gets to $45. And this is just something I'm watching intraday extremely quickly, since this is very, very volatile. And you can imagine you cannot let your emotions control your money in this case, right? If it goes up, just set a certain percentage point. Say, my goal for IQ tomorrow is 2%. It reaches that, I don't care where it goes, I'm just going to sell it. That could be a risk strategy, right? Instead of, if it goes up, then you ride it all the way down and your emotions are getting the best of you, so you're going to sell at the low. So let's just not let that happen. All right, that's it for today's analysis. Thank you very much for joining me. I'll see you guys tomorrow in another Stock Talk. Tomorrow is Thursday. And subscribe to this channel if you have not already. I hope you enjoyed the live stream, as I have done this almost every day. I try to for you guys. And I'll see you guys tomorrow. And happy trading.